get a quick business update now, starting with a look at that rebound on Wall Street. The Dow Jones up half a percentage point, the S&P 500 gaining over 1%, and the tech-heavy Nasdaq, a sector that had seen sell-offs over the past few days, adding 1.7 percentage points. A rally in the United States, so let's see how that's being followed or not on the main Asian indexes. Well, not so much, as you can see there. After a long weekend, stocks in Tokyo opening lower this Wednesday. Investors there catching up perhaps with the other markets that have already lost heavily this week. You can see the Shanghai Composite, the only one just tipping ever so slightly into that green zone. Well, to find out more about what may be playing into those figures, we can cross now to market analyst at FXTM, Han Tan. Han, we've seen that rally on Wall Street, not followed on in Asia, but firstly explain to us what is behind that rally?
Yeah, it appears to be a pretty obvious case of investors buying the dip, given the sell-off that we have seen so far this month, right? I think a case in point, if you look at Amazon with its shares falling below that psychologically important $3,000 level, that proved to be an attractive proposition for investors. Now, that isn't to say the sell-off is over. NASDAQ futures are now in the red as we speak. And of course, looking further out, we have to be mindful of the potential volatility stemming from the U.S. elections just 6 weeks away.
Well, it looks, when you look at the Asian markets that are currently trading, it looks like concerns over a variety of issues still playing into investors, perhaps the pandemic and, once again, tensions between the U.S. and China. The latest statement, again, from Donald Trump criticizing Beijing.
Yeah, but I think, to be fair, the tit-for-tat responses between the U.S. and China, it's not having much of an impact on trading today, well, aside from the specific tech stocks that are directly impacted. And look, I mean, because this is a narrative that global investors have grown well accustomed to over the years, right? And no matter who occupies the White House next year, I think this theme of U.S.-China tensions is set to remain a constant for years to come. I mean, sure, it's a risk that investors must remain vigilant over, but I think for the more immediate term, like you mentioned earlier, there are other more pressing matters to tend to, such as the threat of a second wave in major economies, and these economies are still grappling with the pandemic. And also, investors want to know how they can respond, both in terms of the health response and also the fiscal response in terms of, especially in the US, right? So I think there are more pressing matters that are occupying investors' minds right now. But certainly in the background, the threat of heightening US-China tensions doesn't do risk appetite any favors.
Okay, Han, thanks so much for that, Han Tan there, market analyst at FXTM. Well, indeed, the US Treasury Secretary says the nation's economy is in the middle of its fastest recovery from any crisis in history, crediting federal programs that kept capital flowing as much of the nation went into lockdown. However, many of those programs have now expired, and economists say that another aid package would be critical to staving off economic collapse as the health crisis continues.
Specific help for sectors of the economy worst off in the coronavirus pandemic. That's what the US Treasury Secretary says is needed if a recovery is to be maintained.
I think the next package should be much more targeted. It should be focused on kids and jobs and areas of the economy that are still hard hit, particularly areas such as the travel business and others, restaurants.
The US poured support totaling $3 trillion into federal programs, such as $1,200 direct payments to Americans, expanded unemployment benefits, and a paycheck protection program designed to help small businesses keep staff on the payroll. For its part, the Federal Reserve slashed interest rates and loosened lending conditions. However, there's been criticism its policies worsened inequality by benefiting stockholders rather than those worst off.
The downturn has not fallen equally on all Americans. Those least able to bear the burden have been the most affected. The path forward will depend on keeping the virus under control and on policy actions taken at all levels of government.
Politicians, though, are already bitterly divided over the shape of future stimulus. Democrats favor a massive plan, something Republicans have balked at, and with the death of Justice Ruth Bader Ginsburg, attention has now turned to who might replace her in the Supreme Court, further pushing the possibility of an aid package into the distance as the political infighting escalates.
Okay, let's take a quick look at